Visaka Industries manufactures asbestos cement sheet, also called ACS. With an installed capacity of more than 9 lakh metric tons, it's the second largest asbestos cement manufacturer in India with a market share of 18 to 19%. The company appears well positioned to grow as the building product segment is anticipated to get a boost from the increased government spending on infrastructure and buoyant offtake from rural markets. The company posted solid results in the June quarter despite significant cost pressure. The stock merits attention due to receding cost pressures, ramp up of the VNext board volumes and reasonable valuations. Now, if you look at the numbers for the quarter gone by, revenue rose 37% YOY to 479 crores as positive market momentum in the rural economy translated into healthy volume growth in the core business. Operating profits were largely unchanged as the margins contracted by more than 500 basis points YOY on the back of higher input cost. On a segmental basis, building products revenue grew 22% YOY. While volume growth for the vertical stood at 18%, realizations were up 3% year-on-year on the back of price hikes. Sustained demand momentum across its key end markets aided synthetic yarn business revenue. Volumes for the segment more than doubled YOY on a favorable base. The company's gross borrowing, meanwhile, has increased from 115 crores in March 2021 to 167 crores in March 22 on account of higher capex spends. Interest burden is negligible as debt-to-equity ratio is very reasonable at 0.3x. While the cash flows are largely stable, debt levels are expected to rise moderately, taking into account the planned investments. The company has recently set up its fourth VNext board unit with a capacity of 60,000 MT in Coimbatore. This new plant commenced production in Q4 FY22 and has started supplying its products to southern markets as well. Meanwhile, the forward integrated panel factory has also commenced production in July 22. The company reported 92% capacity utilization for the first quarter, up from 86% in the fourth quarter last year. Given the healthy demand prospects and current utilization rates, Visaka has announced setting up its fifth next boards plant at West Bengal with a capacity of 72,000 tons with a capex of 100 crore rupees. The company has increased its advertising and selling expenditure to push the sales of its latest roofing product ATUM, which is an integrated solar panel with a cement base. The product continues to gain traction as the company has received orders from various export markets including Thailand, Australia, Kenya and South Africa. Visaka has manufacturing capacity of 30 megawatts for ATUM solar roof. Besides, the company also has started offering solar-powered charging stations under the brand name ATUM Charge. While the near-term demand environment remains ambiguous due to the ongoing macro challenges, margins are likely to recover in the second half of FY23 on the back of decline in commodity prices. Scale-up of VNext and ATUM business should boost revenue and aid margin improvement in the coming years. Long-term investors should keep the stock on their radar as the current valuation of 8.5 times FY23 estimated earnings offers significant scope for further multiple expansion in the medium term.